a budget that is already bloated, because 4.8 trillion shillings was not what we had as a budget last year. If we cannot afford it, why go for it? Many people will ask. 2.985 is what we collect as revenues, what is anticipated. This finance bill is seeking to plug a deficit already. Is that the main reason? Should we forget about the justification being given about widening the tax base, or even trying to protect or promote local manufacturing?
Well, contrary to popular belief, this budget is not a State House budget. This is actually a people's budget, and it goes through a very elaborate circle, and there is public participation. In fact, any Kenyan who wants to engage in participation, you've got the opportunity. From the time the proposals come from the cabinet, they go to the National Treasury, they go to Bunge. There are million sessions. Every single day I see the two clerks of the National Assembly and Senate inviting people to give opinions. So you're supposed to be very proactive, very deliberate, and very intentional in making your opinions known. And then number two, to make Kenya very competitive, and the professor has spoken about it, is we must address the cost of production. In my view, one of our biggest challenges is the cost of production in Kenya. Like, for instance, if you're talking about the reason why the cost of eggs in Uganda is, the cost of producing eggs in Uganda is much lower than Kenya, is because of the cost of fields. And you know, the entire of Uganda is green. In Kenya, it's about 20%, which is green. Again, which would open a Pandora's box, because many parts of northern Kenya, Wajir, Garissa, those places are ripe for massive irrigation. You have other countries in the world, in the Middle East, that are engaged in massive beef farming, not because they depend on rainwater, but because the leadership has been very innovative. So at some stage...
Even dairy.
Yeah, even dairy, yeah. Even at some stage, we are going to be asking governors from these parts that since agriculture is a matter of devolution, what have you been doing with your resources? Because a rational Kenyan cannot understand why Israel or Saudi Arabia, they've got farms, green farms, they've got cows, they've got lamb, they've got all these kind of things. And in Kenya, we cannot do that. In the middle of our desert, we cannot do that. Now, on the issue of KRA, it's only fair that we've got a predictable tax administration, and then everybody pays their bit of a share. You know, right now, the people in formal employment have been burdened. So for me, it's only fair that you come up with these procedures and systems that ensure everybody gets to pay their taxes. Now, a gentleman who became very popular, and at some stage not very popular, called Donald Trump, has been issuing tariffs, throwing them left, right, and center, saying that I must protect my economy. However, you can only protect what does exist, or you can only protect after you are given incentives. So it's incumbent on the administration to make sure that the cotton...
In your opinion, have they done that?
Well,
especially for the manufacturing textile industry?
Well, I've not seen very tangible proposals. However, for very prudent business people, business and corporate leaders, they can see that if there's going to be this 5%, how will it affect the cost? And then they start offering alternatives. For, again, visionary business people in Kenya, when they see this 25%, they must quickly look at the mobile phone manufacturers from all over the world and tell them to set up a base in Nairobi. You remember that is what Donald Trump told people from Japan and South Korea, even from China, that you've got a big, the way he says, you've got a big, beautiful market in America. But if you want to sell in America, I want to see those plants here in America. Now, that is what you expect our people from the private sector to do, to be very innovative.
So you also agree, out of the three reasons why to increase taxation on mitumba mobile phones, the one on promoting or protecting local industries does not really count this time around. The industries are non-existent. As a prof...
well, you know, we spoke...
so it's about widening the tax base and raising revenue.
Yes, and you know, Mwalimu also spoke about...
No, even that doesn't...
If you're looking for Kikomi, you will not find this. If you're looking for Rivertex, you will not find this. But there's an opportunity to promote it. And you know, as scholars and practitioners say, there is no silver bullet. I mean, if you believe in a lot of these economic theories, this thing is like a switch. You press red or you press red or black. But you know, it's it's a gradual process.
No.
Okay. That's very clear.
I'll come back to you, Prof.
And then another thing, because this thing you can't look at is in isolation. Also, you must proactively promote Kenya as an FDI destination. so that you get now those international investors are coming to Kenya. Earlier on when I came in, you were making utani about our jirani, about Tanzania, but I followed with a lot of interest President Ruto's trip to Tanzania. One of the key things that grabbed my attention is that a Kenyan-owned bank, Kenya Commercial Bank, has actually supported Tanzanian investors to come and do business. The Amsons, these kind of people who are bringing a lot of resources. If I remember the figures from the top of my head, they've brought about 360 million US dollars. Now, when you bring those kind of resources in Kenya, you are creating jobs in Kenya.
Yes, and I think that's the best discussion to have, because even Mwalimu Sosion, if you listen to Prof, he asked a question about, okay, fine, the budget is 4.8 trillion shillings, but what is it producing?